Hello, everyone. Welcome to another episode of Real Talk with Bob. So, I want to give you what I call some 401k secrets by me, a simple man, kind of just an everyday guy's point of view. First of all, I want to say I am not a financial advisor. I don't own a financial investment company or a financial planning company. I'm just an everyday guy. And I'm one of those people that I got 11 years of experience investing in a 401k. And so I want to talk about some of the things that I have experienced in case you're planning on doing the same thing. I started basically when I was 49. I'm 60 now. I wish I would have started a little bit earlier, but that's the break. I want to say this is not investment advice, okay? So I got to put that disclaimer out there. This is not investment advice. It's just my experiences and my opinion. 401ks. Your employer might offer one. If they do, I would take advantage of it if I were you, but there are some things that you need to know about that I have experienced. First of all, there is what's called a free money component to a 401k, and this is what makes it kind of unique, kind of much different than any other investment that you can do. First of all, I want to talk about the purpose of a 401k. The purpose of a 401k is not an emergency fund. It is a horrible, terrible, bad idea as an emergency fund. It's an investment. And the primary goal of a 401k is to invest for your retirement. One day you're going to retire. I didn't think about this. I wish I would have thought about it when I was 35. You know, when we're in our 30s and 40s, we tend not to worry too much about retirement. But if you can do this, you're going to retire a whole lot earlier because I'm not. I'm not retired. I'm still working. Why? The main reason is I did not invest enough money when I was young. Doing it when you're young is the best. But if you're like me and you waited till 49, it's okay. Even if you wait till 50 or 55, it's okay. Just start doing it. Here's why. Get the free money, the matching, the 401k matching. Most employers, my employer matches 50 cents on the dollar up to 6% of my income. Now, if I put in more than 6%, I don't get the matching on everything above 6% of my income. And I think the maximum in my age group is like $24,000 a year. Unfortunately, I don't have the ability to put in $24,000 a year, but I put in as much as I can. And I love to take the free money. And it really is free money. Don't let people tell you that it's not free money, that that's a gimmick. It's not a gimmick. It's not a gimmick. I look at my balance on my 401k. I look at it about every 90 days. I take a look. And on the website, it shows me how much I've contributed, how much my employer contributed, and how much is the total value. My employer contributed a large part of my balance. So it's there. Now, it fluctuates, it goes up and down based on the investments that I have chosen in my 401k. So it's subject to the ups and downs like everything else, but it's a pretty significant amount that my employer put in there. It's kind of like a reward that they gave me for investing in my 401k. It's my money. And now that I'm 60, if I needed to, I could take that money out and not pay a 10% penalty. I would pay tax on part of it, not all of it. I'm going to get to that. But it really is free money. So my suggestion is contribute up to the amount of that where the amount that you get your matching on at least. Start small. That's my next point. Start small. And everything I'm talking about is going to be in the show notes below this video. I'm going to put all my notes in there in case you forgot some of these. Start small. Figure out what you can afford. You should be on a budget anyway, on a written budget, and you should write into your budget a small amount for 401k. It has to be forget about money. It has to be forget it money. Okay? You contribute it and you forget it. I would suggest that you do not make 401k part of your spending budget, but make it part of your investment budget. And it's money that just you forget about. So pick a percentage. Pick a percentage that you can have deducted from your paycheck that you can afford and that you can forget about. Make believe it's not even there. It comes out every paycheck and you just ignore it. Okay, check the balance once every 3 or 6 months or something like that. And don't check the balance every day. Okay, don't do that. Don't do that. You're going to be frustrated if you check the balance every day. My 401k, since I started 11 years ago, which was in 2011, it has made a lot of money. I would say it's probably doubled. Okay? But if I would have watched it go up and down, up and down, up and down, during some of those down phases, I would have canceled it and stopped doing it. Don't do that. You're going to hurt yourself. So I mentioned give up to the amount where you get the matching. Keep your contributions low if you can't afford much of anything. But even if you can afford 1% of your income, put the 1% in there. Think about that, folks. If you contribute 1% of your income, just one, you still have 99% of your money to live on. If you can't live on 99% of your money, something is very wrong. You need to change your budget. Actually, you should be able to live on only 90%. Invest your 10%. Okay? Pay God and yourself first. Okay, I'm a believer in contributing. I don't always contribute and don't always tithe my 10%. I'm working on that. But I also pay myself 10%. Okay? Now, sometimes I've had to adjust that. Sometimes I've had to shrink my contributions a little bit when something big hit. Okay, I have an emergency fund. Every once in a while, something hits me, an expense that's bigger than my emergency fund. So if I need to, I'll back off a little bit on my contributions. Some people say, Bob, you shouldn't do that. Well, guess what? It's my life. It's my budget. I spend my money the way I want to, and I invest it the way I want to. What I've never done is stop contributing for a long period of time. I will say that there's times where for 2 or 3 months I had to stop contributing, but then I started putting money back in my 401k again, and it's paid off handsomely. Now, even in today's market, people say, well, what about the market right now? Well, what I've done because of my age is I've split my contributions, and some go into stock funds. It's all mutual funds that I have. Some go into stock funds, some go into slightly safer investments. I've heard of people saying that you can, put gold in your IRA or real estate in your IRA. Again, I'm not a financial expert. I'm not a financial counselor. I'm an everyday guy. I don't know too much about that. What I do know is a little bit about mutual funds and some of the other safer investments, and that's where I put my money. And by the way, some employers offer 2 types of 401ks. They offer a traditional 401k, which pre-tax dollars go in there, and they have a Roth 401k. My company offers both. My employer gives us both options. For the last few years, I've only been contributing to the Roth 401k. Why? Because it's tax-free when I withdraw it. Yes, I'm paying the tax now. Bob, you're stupid, right? You're stupid for paying the tax now. Well, think about that. Now, I only do this with a portion of my money because for 8 years I put it into the traditional 401k. So I'm going to have to pay tax on that when I take it out. Some people have a theory that when you withdraw, you're going to be at a lower tax rate because you're going to be older and maybe not working. And so you pay a less tax rate. And why not take the tax savings up front? That's an argument that's going to go on forever. I realized that when I get older, it's going to be nice to have some tax-free income. I'd rather pay the taxes now when I can afford to pay the taxes. See, I can afford to pay the taxes on the after-tax contributions that go into the Roth 401k. The Roth contributions are after tax, but I only pay the tax one time, and that's it. When I withdraw it, I will never pay the tax. And it's kind of nice because that money is also going to be invisible to the government. They're not going to treat that as ordinary income when I take it out, which means I can withdraw that money and they're not going to treat it as income and try to lower my Social Security benefits, things like that. So it's going to be nice. I've talked to a lot of people in my age group and people older than me. I've talked to people who are already in retirement, older than me, that say, Bob, it's going to be nice to have tax-free income. So again, everything I put in now is in my Roth 401k. I would suggest that you take advantage of that if you have it. The next note I have is I'd rather have a smaller amount than nothing. So when I say I'd rather have a smaller amount than nothing, it's back to what I was saying earlier. Even if all you can afford is 1%, put something in there. Now, okay, here's a couple of things that I want to, the key points of this video. Savings rate and rate of return. So many people are worried about the rate of return of their 401k. All right? They say, oh, well, the investments in my 401k suck because the returns are not very good on the funds that are in my 401k. All right, let me talk about that. The thing, my belief is your savings rate is just as important as your rate of return. You make no return if you don't put any money in there. You realize that? If you don't put any money in there, your return is zero. A big fat goose egg if you don't put any money into your 401k. In addition to what I'm saying, your employer gives you matching. That's instant return. My employer matches 50 cents on the dollar up to the 6%. I'm getting an instant 50% return. It doesn't matter what the markets do, what bonds, treasuries do. It doesn't matter the return. Initially, I get 50%. So that's a great return. How many places can you put money in and instantly, like the next day or the next week, you got 50% return? 50%, that's pretty good. Market's been down lately. I haven't lost 50%. I have not lost the company matching. I watch it, and I have not lost the company matching. But I save money. You got to put money in there. You have to put money in there to get anything. Now, if you say, well, I want to get 12%, well, then find the funds that will get 12%. Be patient. Or some people say, oh, I'm not going to put any money. I have a family member that said, I'm not going to put any money into a 401k because the average rate of return of all the funds is only like 5%. Well, the average rate is zero if you don't put any money into it. And if you have matching, then it's 5% plus whatever the company put in there for you. Now, if you don't have company matching, then you got to analyze this differently. And if you really only have funds that don't make much money, much rate of return, you have to analyze it differently. Most good 401ks, they have mutual funds in there that'll probably give you anywhere from 8 to 12%, plus your company matching. But again, you get nothing if you don't put anything in there. So savings rate is just as important as rate of return. Okay, the next thing I want to talk about, and one of the last, is set it and forget it. This needs to be set it and forget it money. Set it and forget it means set the rate that you want to save, put it in there and forget it. Earlier in the video I talked about that. Put the money in, forget about it. Okay? Don't treat this like an emergency fund. Don't put money in there and say, well, if I have a $10,000 expense that hits me later on, I'm just going to pull it out of my 401k. No. That's a horrible idea. Because if you're not 59 and a half, you're going to pay a 10% penalty, plus you're going to pay tax. And you're going to lose a whole bunch of money. So again, decide, what is it you can afford? What can you set and forget about? And never touch it. All right, let me look at my notes here. Again, oh, analyze your risk tolerance. What's your risk tolerance? Learn how to choose the funds that have low risk, medium risk, and high risk. If you have a low risk tolerance, then only put money in the low risk funds that are in your account. That's better than nothing. Again, I'm an everyday guy. I am not a financial investor. I've accumulated a pretty good amount of money in my 401k in the last 11 years. It's pretty good. I mean, mine is higher than the average person in my age at 60. My balance is higher. I looked up what the average is, and mine is quite a bit higher. Now, if you think about the last 11 years, I'm recording this video in 2022. Since 2011, the market's done very well. Look it up. The market's done pretty well. Again, and I've been able to add into there company matching. Now, I'm 100% vested. That's the other thing. Know when you're vested. Vested means know when all that money is yours. Some companies will start like, you're 25% vested when you start, and then 50, and then 100. Maybe it's 100% after 5 years of employment. Whatever. Analyze that. My employer said 5 years after, I think it was 5 years. Don't quote me on that, but I think it was 5 years after I started putting money in there, I was 100% vested. I've been working for them for 11 years now. So I'm completely vested. All of that money is 100% mine. And now that I'm over 59 and a half, that's the golden sweet spot right there, is when you hit 59 and a half. So you got to plan for the future. I don't plan on taking any money out of there. But if I needed to, for some reason, I am going to not have to pay the penalty. I'm not going to have to pay 10% penalty. I'll have to pay tax if I take money out of the pre-tax account. If I take money out of the Roth, I don't pay any tax. You have to have the Roth account for 5 years, I believe it is. I believe that you have to have it for 5 years before you can withdraw money out of there without penalty. Okay? So, let's see. What else do I want to talk about? You can't make anything if you don't save anything. I think I covered that point. I made a nice list before I started this video. That's it. That's my simple man's view. That's my simple man, no financial investor experience or anything like that. But it's worked. It's worked. I'm not going to divulge here in the public internet space any amounts or anything like that, or what my balance is or anything like that. I will just tell you it is higher than the average that people have saved in their 401k. 401ks are great vehicles. I don't care what anybody tells you. I've seen videos here on YouTube that say, oh, they're scams. Really? How can they be a scam? Okay? I've done this for 11 years. I haven't been scammed out of any money. I've not been scammed out of any money in 11 years. And I've made pretty good money in that 401k. So I wouldn't listen too much to people that tell you that. One of the primary sources of millionaires' income is a 401k. It's one of them. Some people become millionaires in real estate. Some become in stocks. Some do other things. Some start a business. The majority of people that have $1 million net worth, you can look this up, it's a fact. The majority of the people that have $1 million net worth have it in their 401k. And I think it's an excellent vehicle. I think financial vehicle is what I'm talking about. If you do it right, if you put money in there that you can afford, if you set it and forget it, if you keep yourself on a budget, if you don't treat it as an emergency fund, and you take the company matching if it's offered, I think if you do this for 11 years like I've done it, you're going to be very happy. Do you have any comments? Do you have any questions? Is there anything that maybe I got wrong? Is there anything that I got right that you appreciated hearing today? Please subscribe to this video if you like the information. Real Talk with Bob. I'm trying to grow the channel. I only have a small amount of subscribers. Like this video. Share this with other everyday, ordinary people. Give me some comments down below. Thanks for watching another episode of Real Talk with Bob.